In this video, I'll be reviewing my portfolio for January 2026 and position changes of the last couple weeks. Obviously, there was some major volatility in the precious metals market, so I'll comment on my positioning and outlook there later in the video. Starting off, looking at the overall portfolio performance, I have 72 holdings and I'm up 2.95% in January, even with the big pullback on Friday. A lot of the gains that evaporated were gains made in January. So I still have 48% of my portfolio exposed to the precious metals sector, and I'm continuing to look for opportunities to add exposure to the oil and gas sector that's just sitting at 4% right now. So it's still quite small. I'd like to get up to at least 12 to 15% of my portfolio, if not more. I had bought the first tranches the last couple months, and those positions have already ran away a bit. So I'm looking for a pullback to add more. I still have about 15% cash, and I like having some available for opportunities. But I will say, in this kind of market where inflation will continue and you want to own as many hard assets as possible, I do have a bit too much cash. So I am continuing to look for opportunities as they present themselves. I'm also still looking at gaining more exposure to copper and agriculture in particular. And here's a look at my top 25 positions and sizing. Moving into the position changes, highlighted in yellow here are my buys and sells. Good amount of changes the last couple weeks. I didn't put a video out last week, so I'll be covering those in this video too. I'll scroll down real quick so you can pause if needed to see any particular position. So starting off with Tourmaline, this is another stock pick from Rick Rule. I'm sharing his Substack on the screen right now. He made this post on December 8th. Those that know Rick knows that he thoroughly vets what he'd recommend, so I don't feel the need to overly research it. The primary reason I added this particular stock is the natural gas exposure. Over 70% of their revenue is from natural gas versus oil, while all the other oil stocks, oil and gas stocks that I own are primarily oil or more mixed with the natural gas exposure. And just to show the Seeking Alpha ratings on Tourmaline, a lot of the research is strong buy, including from Wall Street. Next, I added some more MSTR. It did just pull back into the 200-week moving average here. Now, looking at Bitcoin, it does look like price is breaking down. And if I consider the 4-year cycle, then we'd be in a bear market until late 2026 or early 2027. And that could very well happen. But I have a feeling it might not play out that way just because everybody is expecting it. The cycle has happened 3 times before, and so we're expecting it's going to happen a 4th time. And it's just one of those things where I feel like it's a crowded trade. I could totally be wrong on that. The 4-year cycle could play out. Who knows? There could be a bias by myself from the circle that I follow on X, but I'm willing to make the bet just in case. And if it's wrong, I'll just dollar cost average in and perhaps buy some calls in the future. So if Bitcoin does move into a bear market and it goes further down, it'll become a smaller and smaller part of my portfolio percentage wise, especially if the precious metal sector continues to do well. So then I'd be willing to add additional exposure and perhaps even leverage exposure. So I know I mentioned before I am looking at a trade for that, and I still am technically. I have my Bitcoin and I'm going to hold that forever, but I'm just using MSTR as a shorter term play. But I'm okay turning MSTR into a longer term play because I'm just right. Who knows if it's going to rally from here or if we're going to have a further breakdown. And I'd rather keep the bet on because I just don't know what's going to happen, and I'm okay turning it into a longer term position. Next, I bought MSFT, which is Microsoft, just a couple shares. It's had a dip recently, so I picked up a little bit here, and this will just be something I'll hold forever, like all of the positions in my account labeled investing. Next, I bought a future option on SB, which is sugar futures. I don't want the risk of holding a futures contract, so I bought an option instead, and I might do the same in the wheat, corn, or soybean markets. These markets have pulled back significantly from the highs, and I think they'll benefit from the broad commodity bull market, just like in potash. And then I also wanted to show this interesting chart of sugar over silver as well. The market broke these lows, and then with the pullback in silver, it just reversed off of these lows right here. So it makes it look really interesting for sugar to potentially outperform silver for a while. All right, now I'll get into the precious metals. So, first off, I highly doubt, and I'm not betting on obviously, that this is a top or an end of the bull market. It just doesn't add up time wise, even if price has gotten a little frothy. The activity with the precious metals dealers doesn't make sense either. It was mostly sellers in the shops in the US, not buyers, and multiple sources confirm that. I called some of the shops around my house, and they said that the refiners were backed up from inventory surpluses. So a lot of people are selling and they're shipping, the shops are selling that inventory to the refiners. So there's been a flood of selling in the US and not buying, and that's typically not what you see at a top. How are all these retail people smart money? So I think more likely this is an intermediate top, which could take months to play out before a new high. But I tend to agree with Gary Savage and Michael Oliver, who are a couple analyst services, that ultimately we're in the final stages and blow off move of a long secular bull market. If I pull up this long-term chart of gold here, you can see just that, right? We had the rally from 2000 to 2011, a big cyclical bear market, and then now we're rounding off into a parabolic move for a blow-off top somewhere. And even though it's a blow-off top, these things still take multiple years to play out, as we've seen from 2023, 2024 into today. And just to say, I doubt there's any paradigm shifting, new reserve currency, anything like that. The can on that type of stuff can be kicked down the road way longer than any of us think, including servicing our debt payments with the surmounting debt. These cans can be kicked down the road really, really far. So I wouldn't worry about those kinds of things. Ultimately, we're just near the end of a cycle and things are going to get nutty. For the silver calls I bought in early December, I added markers on the screen where I bought and sold those. So I bought 6 calls right here on December 9th. I sold 3 of them on the 26th. And then I sold 1 on the 23rd and 1 on the 26th. So overall, I've locked in 10K profits so far. And then I still have 1 call that I'm holding. So even though I did sell those SILJ calls too early, I should have hung on to those for a little bit. I'm really happy with this trade, and I'm really proud that I was able to hold through a lot of this movement. And then I'm proud that I sold near the top here, and I didn't hang on to my position and get too caught up in the euphoria. Now for the stock sales, I sold 10% of all of my precious metals stocks on Friday, except Metallo Royalty and OC Max. So here's my thoughts on that. I don't think I'm smart enough to know which stocks are going to peak and when. Yes, I could do valuation projection, follow them religiously, and focus on companies that don't need higher metals prices. But to be completely blunt, I don't think you need to do that to make great money in the resource sector. At the time when I bought a lot of these stocks, I did do the homework, and I see tracking from the analysts I follow. And occasionally I'll catch back up on the stock. I did an analysis of K92 mining, which I'll link on the screen here if you want to check that out. But ultimately, they're going to peak at various valuations, and I just want to trim along the way, just like dollar cost averaging over time when you're buying. The same thing when I'm selling. I just want to slowly sell over time into strength. And that was my original strategy, and I honestly already failed, but I can salvage what I have left for the remainder of my positions and going forward. Now, when I say I failed, I sold out of some of the positions that moved really big, really fast. So, as Buffett would say, I trimmed my flowers and watered my weeds a bit. So, just to show a couple examples, I ended up selling out of Golconda Gold here. I had a cost basis of 27 cents. I sold it at 150 because, again, it went up so quick. And look how much of this move I have missed. I also sold Santa Cruz Silver completely somewhere back here. I think I had a cost basis. I can't remember what the split was, but my cost basis was around 30 cents before the split. But in any case, you can see how much of the move I've also missed in this stock. And then I sold out of Abra Silver somewhere around 650, so I've missed a good move here too. So I missed a lot of gains in those stocks, and I don't want to miss the boat on what I have left. So my plan is to periodically sell 10 to 20% of all positions, regardless of what I think of the stock's potential as we have strength. There's obviously exceptions to that. I might do anything at any time, but that's just like a general rule that I want to follow. I unfortunately did miss the strength last week in the sector, and we obviously had the nasty sell off on Friday. But I'm just going to take it on the chin, and I sold the 10% of all stocks on Friday, even after the pullback. Just to share, right, even with the huge sell off on Friday, really me selling 10% here is no different than if I had sold on January 12th. Right, it's still after a huge move. So it is what it is, and I just wanted to be a little bit defensive just in case. You never know what's going to happen, so it's just prudent to take a little bit off the table. It makes a lot of sense to me. And I still have all of my OC Max and Metalla. The reason I kept OC Max is because it's a fund of the largest and best mining stocks with primarily gold exposure. So I don't mind writing that out. And the reason I kept Metalla is because they have copper exposure as well. And I think it's an interesting company to hold into the 2030s as copper supplies tighten. So coming back to the outlook on the precious metals sector, with the big pullback we had, it's possible that April turning point could be a low instead of a high. But I'm honestly not sure how quickly price will recover. But I wanted to show a couple charts from one of Jordan Royburn's videos. His channel is The Daily Gold on YouTube. Go check it out. This is one of the analog charts of silver's breakouts. Now, based on where I think we are in the cycle, I'm looking at the dark red line that is 1978. So we're pretty far extended, having moved really far really quickly. So silver could correct and consolidate for potentially several months. So the idea of a blow off top into the end of this year or early to mid next year, 2027, makes the most sense to me. And the other chart I wanted to show is the implied allocation of miners versus equities. And it's still very low compared to the historical norms from 2011. So between the retail sales in the US and implied allocations like this, and just to say, the chart of implied allocations to the metals themselves looks similar. I think we still have another leg up in the precious metals markets to an actual blow-off top. That's all for this video. If you have any questions or wanted to see something I didn't cover, let me know in the comments below. As always, I post all my transactions in real time on X. My handle is LionEyeYouTube. Link in the description. And subscribe to the channel for ongoing portfolio updates as these markets unfold. Thank you so much for watching. I'll see you in the next one.